Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. Today, we're going to be delivering your daily cryptocurrency market update. I hope you've all had a great weekend. It is indeed Sunday, so we're not going to do anything too strenuous in this video. However, it's going to be technical enough to really get my point across. Yesterday, we spoke about how potentially we were looking at a rally for Bitcoin, a further continuation in the kind of short squeeze that we've had. And this scenario is very much moving up in terms of my forecast for the cryptocurrency market. I am not by any means, shape, or form calling for an end of this bear market. In fact, I'm calling for the opposite. I think this bear market is going to continue, and I think it has everything to do with the macro situation, which we'll touch on towards the end of the video. However, short term, I am bullish. Short term, I do see potential for this rally to continue, and we're going to get into that in this video. So we are going to be going over a few things. We're going to be bringing up Wyckoff accumulation. Wyckoff really got popular on Twitter and with the crypto community when it was called for back in March, obviously with the Wyckoff distribution. But I do think potentially, certainly on an hourly time frame, it does look like this is something that's taking place. I think that it's hard to go long in a bear market with conviction because there's a whole load of catalysts that could essentially tip this market on its head and push it to the downside. The dollar really becoming strong is one. I actually think the dollar is going to take a little bit more time to get back up and go to new all-time highs than I'd originally expected. Could be slightly floppy for an extended period of time. And I think that's going to allow the crypto market to see that continuation. And just the short-term structure. I mean, if you were trading this on an hourly time frame or any kind of a short-term time frame, to me it makes a lot more sense to go long with a tight stop where you're clearly holding this support, and if you break it then you go in short, than it does to actually put a short on here, because you're right at this support that you are currently holding. So we'll talk about it all in this video. I think the main reason that I'm sort of worried about maybe an extension in this rally, I wouldn't say worried because we'll trade it, and if we're right, we'll make money from it. And ultimately, I still do expect it to lead to further continuation to the downside. But it's this bullish divergence that you've got on the RSI. I think the more and more I look at this, the more and more you've got to take it seriously. Certainly after a contagion like FTX has took place, you'd kind of expect your RSI to be maybe, putting in a new low here, and the trend's very much intact. But bullish divergences don't have to play out. They are typically early warning signs that maybe a broader trend is coming to an end. But I think that really with the crypto market, just like the equity market, just like everything, guys, it's all liquidity based. And I think that we're still in this scenario where we're at very high demand for the debt market in terms of liquidity required to service it, and that's only going to get worse, and that money has to come from somewhere, and I think it's going to be crypto and the risk on asset class. This is the rolling 9-month net foreign purchased in terms of $1 billion of US treasury notes and bonds, and then you've got equities, and you can see the correlation here, guys. So the higher the demand is in terms of having to service the bond market, essentially, the lower the equity market goes, and that's because liquidity is needed from those markets to go in and service it. But yesterday we really looked at, okay, this was kind of the last time you had a bullish divergence, and this was leading into the March 2020 capitulation. And actually I can see this, and we'll get into the Wyckoff, we'll get into the smaller time frames, and we'll talk a little bit more minutely about what's going on there. But actually I can see this playing out again, to be honest. You've got very similar structure here as well in terms of how you're sort of coming down. You're coming down in a channel. You sort of break that channel, but it's kind of a marginally lower low almost. I think something like this is probably gonna take place. That would be my scenario for how I think, and that would sort of validate this bullish divergence, and then maybe it puts in some sort of a bearish divergence or something here. In regards to your highs. But this is kind of what I'm looking for over the coming weeks. Now, this doesn't have to happen again. There's so many catalysts that could tip this. But I think from a short-term trading perspective, put a time frame on short-term, couple of weeks, 3 weeks maybe. Doesn't even have to be that long. Short-term, mid-term being a series of months to long-term being, 6 months onwards. I think potentially you are looking at some sort of a squeeze here. And one reason that I kind of think this is because of this divergence. I also think that when everybody is bearish, and there's reason to be bearish, I'm bearish, but when everybody's this aggressively bearish, when you get all your crypto Twitter celebrities coming out and talking about, just forget it, guys, come back in 2024 and, the see you at 10K and all this stuff, even though there's definitely the potential to get down there, and we very much made the argument for it and think that, there is a good likelihood. I think you get more closer to 12 than you do 10. But that concerns me, because it shows that people are getting kind of, when a trend goes on forever, you kind of almost need a flush out to get people bullish again, only to take that liquidity. This is how markets work. It's all about people losing money at the kind of core of it, and some people making money. And this is kind of what I think's going to take place. So this bullish divergence is very much to be taken seriously. I want to just show you the hourly time frame now. And this is something, and we'll get rid of the RSI, that we've actually been watching very, very closely, because ultimately we're day trading this market every day. For anybody that wants to trade with me, you're welcome to join my Patreon. It's not the be all and end all of my Patreon. It's just that I happen to trade. So I don't mind sharing it with you guys. We have profitable weeks. We have weeks where we're slightly negative. You'll learn to trade basically with me on a daily basis if that interests you. But essentially, we've been watching this closely. And we shorted here. We actually longed here. And we actually publicly came out, and before we had even had this move here, said, you're about to get that short squeeze. You got one of my favorite trading signals, which is this sort of double bottom with the right butt cheek slightly higher than the left. And off you went. And still, today, it very much looks like a retest of what was this grind line. And retests are common. The thing is, though, since you've had this retest, you put in a higher low, you're not getting harshly rejected off it, which is what I'd like to see as a precursor of a retest. There's sort of, with TA, there's sort of rules to go by, and then there's intuition that also has to kick in, and sort of muscle memory in terms of knowing what plays out in markets and what doesn't. And ultimately, a lot of this is probability-based guesswork, essentially. But I think the fact that you're actually holding very, very nicely this support, and this has been support. You spilt through it. You always, if you were short here, okay, well now you should be saying, oh well, hang on, we've retraced and are holding. Can you see how this very small area of consolidation essentially is what led you to the downside? We're actually holding this. So for me as a trader, and this is just me three-balling here and throwing out a little bit of sort of freehand TA. For me as a trader, it makes a lot more sense for me to look for longs here. Certainly on something like this, because I have very clear risk to reward. Certainly I could have a very, very tight stop. I could have a wider one. I could even come back, extend it to your order blocks, for anybody that trades order blocks. But this makes a lot more sense, because if you can clear this, you are going to bump into these levels here. You're looking at potentially a return move all the way up here. Okay? And actually, I think if the traditional market behaves, and one thing that I could definitely envision happening, some sort of a retracement of this sort of FTX spill. Potentially. But I think what that sets up is everybody going bullish again. Maybe do something like this. Then we get a big blow off. And then you'll essentially put in some sort of a topping structure. Maybe do something like that. You come up. And then you go. This is kind of what I'm envisioning taking place. So we're potentially calling for a run above 20K here. So that's just me doing a little bit of free balls on the technical. Let's look at this. from a Wyckoff perspective. You can see it. This is your spring. This is your short squeeze that we called. Everybody's too short. Everyone's getting in record positions in terms of shorting. I don't want no part of that. I don't want to be on the side of everybody else. Because the statistics when you look at traders and investors is the majority lose money. So you want to kind of be majority against the masses. However, there is reason to be bearish, but positioning is so important. Just because a trade has every single reason to go in one direction, until you get a setup that's allowing you to get in at a good risk to reward, you don't really want to take it. So this is kind of what I'm maybe envisioning is gonna potentially take place. Let's move it to a 2-hourly to get a little bit more real estate. Something like this. Maybe on the cards. And this would call for very much coming into here, at least. So I think at least a rally is back to sort of 17,800. Maybe that's all it needs to sort of get everyone bullish again, and then it will take all that liquidity, and we'll get some sort of event on the sort of traditional market side of things, which we've not had yet, guys. Yes, we've had the stock market sell off, but we haven't had some kind of a break of the traditional markets. I very much think that that's coming, and I think that's what the yield curve is predicting. And I think that this is what I'm saying. There's so many little fragile pieces in regards to longing this. We need to see dollar can be persistently floppy, so it doesn't have to go down, but it just has to not be really going anywhere. That will allow equities to rally. You've got to remember as well, I think maybe there's a delayed response between equities really rallied. Oh, wow. What a messy chart. Equities really rallied very hard. Gold off the back end of the Dixie. Falling. So you can see this. Obviously, we've got the Dixie up top here. Equities. Let's throw Bitcoin on. Bitcoin actually sold off with the dollar. And this was to do with FTX. So is there potentially going to be a delayed response that bullish divergence is essentially warning us of? And we're going to put a little bit more pain onto the shorts before we ultimately go in the direction that I think we will. Potentially. Remember, I'm not calling for the end of a bull market here. I'm just calling for markets don't go down in straight lines. And when everybody's bearish, you know, to this degree, you should be bearish, I think, when we look at the macro picture and the liquidity sort of side of things. But I think that something like this actually is not out of the realms of possibility for me, because people are too damn bearish. And we're at this stage now where actually, look, if FTX hasn't, and I don't think we've seen the full contagion of FTX, I think there'll be another catalyst around the corner. I actually think, to be honest with you, crypto, if there's something that happens in the traditional markets, there's going to be a further grab for liquidity, and people will pull money out of all assets. And this is kind of what I'm thinking is coming around the corner. There is also minor capitulation, but this noise may go away. You know, this is minor revenue lowest in 2 years. This noise may go away. I think there's a good potential for it to go away, actually, if we come up here, but then it's going to come straight back on. Like, this is the thing. We may... And the market loves to do this here. It loves to... Can you see here? Everyone's super bearish. Boom. Something like that. And then we come down. But I think once these levels start to really go, you know, you got to remember you're also here. So there's price action here where there was obviously liquidity. Look at where you're bouncing. Okay? You can also see over here. But the problem is you fall this, you know, here's getting hit, here's getting hit, and I potentially think down here's getting hit. But I don't think we go down in a straight line from here. I think everyone's too obviously bearish. I think you're going to get a move to the upside. It's going to gain a bit of momentum. Everyone's going to get bullish again, only for everybody to get absolutely wrecked and for us to see maybe something like a 50% capitulation from here. And I don't think that's out the realms of possibility at all, ladies and gentlemen. I mean, this one was, what, 44? 47? 52, you know, potentially. But we'll see. Just scenario casting, you know, I think that this is kind of what you're doing. You know, you've spilt down here, you've come back up, you're holding it, you're here currently. You're looking for that upside, and you're going to keep taking levels until something happens that's going to turn everybody bearish again. Or until everybody gets bullish enough for the market to actually just take money from them. And I actually see a slight continuation in the stock market. So I wouldn't even put it out of the realms of possibility of it running somewhere like here. And this is where we get everyone in terms of bullish. Because everyone's going to be going, okay, well, you know, we're officially out of a bear market. We're officially out of a bear market. No, we're not. You know, the situation that we're in, people have recency syndrome and they really suffer from it. The situation that we're in is not going anywhere. We're seeing things in traditional markets that we just have simply not seen in a hell of a long time. To ignore those warnings, I think is you don't want to be playing in traffic, basically, in terms of from an investment point of view. It's why we stay majority cash. And we're happy to sort of, okay, let's say, and I absolutely don't think that this is, I think you're just going to get a rally out of this, or a relief rally that's going to trick a lot of people. But let's say this was the bottom. You've got plenty of time to get back in. Remember, we got out at 44K, which I still think that people believe that that's not a good number to get out at. Yeah, it wasn't 69K, but you know, I just want to remind people that how little volume these people that said they sold the top just because they wrote a Twitter thread. Your smallest volume occurred round here. I mean, this was your smallest level of volume, and then it was relatively small all the way to here. So back to 58K. So who actually sold up here is what I want to know. And is there proof of it? Have you seen a position? Guys, you can literally say whatever you want on YouTube and nobody checks it. It's kind of like TV. You know, the media can say whatever the hell they want and nobody checks it. So just be aware of that. So that's really all we've got for you. You know, we still think the macro situation is terrible, but we're really just scenario forecasting a bullish outcome. I think also another thing to mention is alts are very much leading this. Look at Chainlink, for example. I know I stated this a couple of times, certainly stated it to my Patreons. I knew a lot of people that were buying here for spot. And look at it since. You know, and we'll do a whole video on, I think we've even been long in these if I've left some positions on. Yeah. We'll do a whole video on, got what I was going to say there. Anyway, guys, I'm going to love and leave you on that note. If you enjoy the content, like, so it's appreciated, so as a comment. See you in the next YouTube video. Enjoy your Sundays, and I'll catch you on Monday, ladies and gents.